Okay, fourth quarter trading by Robert Rivera. Okay, the market has shifted, right? You guys have noticed the difference in the market, right? How price is moving much later. The volume is just not there and I'm talking specifically for the London people. Us London traders usually see some sort of movement around 1. At 2:30, the movement starts picking up, and by 3 o'clock, we already have had an opportunity at least for a trade, even if we didn't take it, and we may be able to go to bed and forget all about it. Well, that's not how it's been happening. So let's go ahead and keep going. Volume is showing up later, right? That's exactly what I was saying. Without volume, we don't really have an edge, and that's where I'm going with this, right? No movement. The movement is really slow. Of course, we've had some holidays also, but regardless of the holidays, still the market is moving really, really slow, okay? Volume creates breaks in structure, right? Which is what we like to see. We like to see those breaks in structure for either breakout opportunities or retest opportunities or fair value gaps or supply and demand opportunities, even trend line breaks, you know, if you trade them, or Fibonacci levels, whatever it is, right? We want to break out of consolidation in order to be able to see what the new trend is or the continuation trend is, in order to be able to take advantage of that and enter into a position. Well, if we don't have volume, we're not going to see breaks, right? We're likely to see fake outs is what's probably going to happen. And so we can take advantage of those, but still, if no volume, even the fake out is going to be a problem. No structure, no break, no structure, break, no edge, okay? And no edge, no trading. That's really it. I mean, got to shift into either we trade later in the session or we don't trade. Volume hours, right? What used to occur between 2:30 and 4 a.m. is happening between 4 a.m. and 6 a.m. Eastern or later. I put these here because by 5 a.m. or even before 5 a.m. I'm already gone, right? I'm already gone from here. So I'm not here to see it, but I do notice that when I wake up in the morning, it's 6 o'clock in the morning, 7 o'clock in the morning when finally the break happens. If it doesn't happen then the volume from the New York Open may bring it. If it's not then it's 9:30, it's much later. If not, then the move is occurring pre-New York to New York, right? 6:30 to 10 a.m. is usually when the movement then happens. So what does that mean to us? We need to narrow our focus to retain our edge, right? If there is no edge, we're not gonna go into the market. There is no sense in placing any trades out of boredom or just because I'm here, because I've been sitting here for a couple hours, 3 hours or whatever. It's not a reason to put a trade. That's a good reason to lose. You know, without an edge, we can't go in. Okay, we got to wait for what we recognize as an edge for us. And there's several edges, right? We have many strategies that can work. Something has to happen in order for us to make a move. But here's the thing. If nothing is happening, we'll make up something. You know, we'll make up something in our minds that's happening. We'll create a vision of of a play that's not really there, okay? Christine is saying, I have been experiencing that same thing. Yeah, because that's how the market has been moving. Okay, so we need to narrow our focus. We must have specific markers we're looking for and confirmations. And this is what I'm getting really focused on, confirmations. Since we're looking for confirmations in the trade, breakouts are out. I'm not taking any more breakouts, not for the rest of the fall and winter here. Confirmations. Retest must indicate rejection, right? So instead of taking a retest at the zone immediately, maybe I have to go down to the lower time frame, you know, to see a 5-minute, for example. We usually take the breakout on the 30-minute at least, right? The breakout has to happen on the 30-minute. Then the retest comes in the 15-minute. Well, I'm probably very likely, and most likely, this is what I'm recommending, you go drop to the 5-minute and see a candle in your direction to close. See a candle that closes in your direction. Once the candle closes in your direction, then you can take the break of that candle. At the worst, what will happen is you have a stop at below that 5-minute candle. So your stop is going to be short. And if you get an L, it's going to be a small L because it's going to be short pips compared to the rest of the move that you can catch, right? And we want to be taking profit at that high, or just simply 1-to-1. There may be range for more, 2-to-1, 3-to-1, 4-to-1, but because the market tends to be choppy during this time, If we can get a 1-to-1, we've done really well. On the fake out, we must have an actual break and return, right? When you get a fake out, we got to get to close outside, and we got to get it then to close back inside. And we will see a lot of these, okay? Especially if you are conservative with your zones. If you make them too tight, it might go too far, and then you're not gonna get a retest. Or it may be a fake out, and you're not gonna see it as a fake out because it's gonna break outside, and then the next candle is gonna come back down, but it's not gonna re-enter your zone because you make your zone too tight. On fair value gaps, you must have a breakup structure. That's what I'm gonna spend a little bit of time explaining here. For example, okay, this is a good example, breakup structure. Okay, this is a pre-London consolidation. By the way, this is EU, and I'm gonna give you examples from EU for the last 3 trading days. When you see the indicator show up on the screen, the indicator will light up at 4 a.m. Okay, it's not 3 a.m. It will light up at 4 a.m. Just giving it a little more time because, as we know, again, the volume just has been pushing back. We see the open of London, nothing happens. You know, London opens and it's 3:10, it's 3:15, nothing happens. 3:30, maybe there's some movement, and maybe there's a little movement as it's getting ready for the real move at 4 a.m. Here's pre-London consolidation. All right, there's an obvious breakout, right? That's clean. We can see the clean breakout, and on that clean breakout, we can see that there's a fair value gap right there as it broke out. I'm not really looking for the retest here, even though it could be valid. A retest here at this structure could be valid, right? But I'm looking for the fair value gap in this case. All right, it's a more sure thing, okay? Because it wants to come and fill it up. Okay, there's the fill. I'm not gonna take any fair value gap that is not on the other side of the golden zone. All right, it has to climb up above 61.8. It could be in the golden zone. It probably would work on the golden zone, but I'm trying to get at the edge to work best in my favor. For example, if I take an entry here, you're gonna see it was still valid, but my stop loss is still up here, right? So my risk reward has been lessened significantly. I wanna take it at the 61.8 or above. Broke out, came back to the fair value gap, filled it up. Okay, my entry would have been at the 61.8 or above. No, I would have been at the fair value gap, but I'm saying it's above the 61.8, so this is good. Okay, and boom, there's the result. So it broke out, right? Came back, fair value gap, and respected the fair value gap and dropped. Once it respected the fair value gap, it starts a trend, right? There's a break, starts a trend. What does it do? Comes back, and when it drops again, it creates another fair value gap. Okay, which is also above the 61.8. I'm sure you can see it, right? If swing high, swing low, definitely at least 61.8, and it drops again. Okay, interestingly enough, it almost left another one here, and it did the same thing again. Because once price starts to trend, it will do these fair value gaps over and over and over. It gaps, comes back, fills it, drops. Gaps, comes back, fills it, drops. If it's dropping, if it's going in the opposite direction, the same thing. Friday consolidation. Now, again, I covered this whole entire thing because this is still before London open. Here we have the breakout. Here we have a pullback. This pullback here, again, you got to do it at below the 61.8, right? I wouldn't take this one up here. I wouldn't take this fair value gap over here because from this swing low to this swing high, this is not below the 61.8. Okay, this is not below 61.8. Will be somewhere down here. It wouldn't be there. I'm waiting. I'm still waiting. Look at this one move. This broke the structure again. So this move here broke this structure, right? And now this push up broke this high, broke this structure. If you remember my conversation on market structure and fair value gaps, the fact that this broke this high, this is now the new low. So now this is the swing low, which means this should be respected. Now we have two fair value gaps. We have this one right here, and we have this one right here. Both of them are below the golden zone 61.8. So as long as price comes below the 61.8, I'm taking it. And this is what happened. Price came in, look at it. It didn't touch this one. It didn't mitigate this one. but it mitigated this one. It gave confirmation. And even if you waited for this candle to close, to then take the break of the high, like we discussed earlier, you got paid. You got paid very nicely. And in fact, there's another fair value gap right here, right there, where it came back down, filled it, and then took off. These are, so far, 2 examples of what it looks like to break structure. Now that this has broken structure to the upside, this low should be respected. This is what trending is, right? In this case, this is the low. Higher high. This high is higher than this one, right? Higher high, higher low. Higher high, higher low. This one did not create a higher high. Neither this one created a lower low. So we're still good. This is still a lower high than that. And now we have a break. Higher high, higher low. So in other words, it's just, that's how trends are, right? Higher highs and higher lows. This is last night. Same consolidation before the 3 o'clock candle opened. We have a breakup structure right there. We have a fair value gap right there. And as long as it comes below the 61.8, I'm good to enter. Okay, and it went below, almost all the way down to the demand basically, and took off. Now this one did not break the high. It still paid 1-to-1. Summary: fourth quarter trading requires more patience, right? We know that. Volume is coming in later. We know that. Must wait for confirmations. Those are the confirmations that I'm looking at. Well, I'm basically no breakouts. Anything that's not a breakout is a retest, right? All of them are retests. Supply and demand is a retest, fair value gaps are retest, and the break and retest is a retest. Okay, so everything else that's not a breakout is a retest. We're going to use confirmations on the retest. When all of this happens, again, when there's volume, which is much later, you must wait for confirmations. The best confirmation is breakup structure followed by a gap. If you have a breakup structure with a gap, when and if price returns to the gap, pretty good odds that it's going to go in your direction. And that's that. Esto se acabó. Any questions related to any of that?